welcome to Money, 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 your weekly personal finance date with me, Surabhi Upadhyay. Now, there are several reasons why suddenly investing in global stocks is becoming the hottest trends. In fact, if we talk about it, we've seen the retail interest play out in the equity market here at home. And now we're talking about the ability to invest in global stocks, specifically US stocks. The options are already there. In case you haven't jumped onto this bandwagon, over the next half an hour, we're going to tell you exactly how it's being done. And of course, a lot of the new changes that are on the anvil. So here's a quick primer on why global investing and what's the setup in India right now. First of all, key reasons: diversification, that's very obvious. Currency tailwinds. So we looked at some data, and over a 10-year period, for instance, the dollar, if you're in a dollar denominated asset, the dollar has appreciated versus the Indian rupee by over 60%. Then, of course, lower valuations. There's often an argument made that international parents trade at cheaper valuations than the listed Indian subsidiaries over here. Let's move on. What are the ways in which you can do it? There's the mutual fund route, and global funds have been around for several years and they're only increasing in size. And there is direct stock investing, and this is the exciting piece we'll come to in just a moment. The mutual funds now, look at the way the AUMs have surged. So if you're looking at the AUM of the fund of funds which are investing in overseas markets, well, it was just about under 4,000 crores last year. As of June 30, that number has swelled to almost 18,000 crores. And that's what we're talking about in terms of the MF route. You can, however, also buy and sell US stocks directly sitting right here in India, thanks to several Indian brokers tying up with entities like Stockle and Vested. Now, these are two global digital investment players which have the infrastructure to connect a broker in the US with a broker here in India, facilitating stock trading. In fact, Stockle really describes it pretty well themselves. They go on to say that we think of ourselves as a digital infrastructure company, building pipes from the source market where investors are to destination markets where the investing product or the ultimate shares are. So that's the way it's working. Let's go on and try and sort of understand this. The way this works is that Indian brokers having tie-ups with these digital investment platforms let you set up a trading account. Then you can use the platform to buy stocks worth up to $250,000 a year per person. This is under the LRS scheme, or the Libertized Remittance Scheme. Capital gains. Now, what are you doing with taxation? This is the interesting one. This capital gains taxed as per Indian law, and we'll tell you more about it as we go forward. Dividends, if you're into US stocks, they are taxed as per US law. Now, a lot of different brokers have tied up with some of these platforms. For instance, for Stockle, you have tie-ups with the IIFL, HDFC Securities, Motilal, Scripbox, several others. Similarly, Vested is a different platform, and a lot of Indian brokers have tied up with Vested as well: Axis Direct, Kuvera, Angel Broking, and several other names. Here is a twist in the tail, however. Now the stock exchanges are getting in this game. The NSE is all set to launch the trading in depository receipts, US depository receipts in Gift City in Gujarat. The biggest difference, of course, here is that it's not the underlying share that you'll be trading. It's not the actual share you are trading in, but the depository receipt. This is not all. The BSE is actually looking to get in this in a big way as well, and they're looking at tie-ups with multiple exchanges around the world. The landscape is getting interesting, which is why, without taking any more time, let's quickly introduce our panel to help us figure out how this can be done sensibly. Our guests on the show are Radhika Gupta of Edelweiss AMC, Gaurav Rastogi, founder and CEO of Kuvera, and we also have representation from Stockle itself. Sitashwa Srivastava, the co-CEO and co-founder of Stockle, is with us. Ladies and gentlemen, great to have you on. So exciting times, right? And as the numbers tell us, as the growing infrastructure tells us, I just want to start with you, Radhika. You're the lady on the panel, and also mutual funds have been our first route, right? The simplest route of the last couple of years. But now there's more competition. There's direct investing coming through. So your thoughts?
So firstly, I think it's good that the awareness of international investing has risen so much. And I think any route is a good route, but the awareness is fantastic. I think we've been present in this market since 2017 as Edelweiss MF. But, if you talked about investing abroad, even in 17 and 18, people were like, why do you need to do this? Domestic markets are doing so well, etc., etc. cut to, I think, the last year, year and a half, and perhaps the most questions that we answer or the most consumers that we get are in our international fund. So I think, first of all, opening up of this idea, opening of people's minds to investing abroad, I think is a very good thing. I also think that people are hopefully investing abroad for the right reasons. The reasons are structural. People are looking at diversification. People are looking at currency. People are also understanding these markets because they understand the companies and the product. So it's not just a FANG that people understand, but they understand semiconductors, electronic mobility, many of these themes that are not listed in India, digital payments. I think the awareness and the investing is happening for the right reasons. So I think that's very good. More choice is good. The only caveat, of course, I always say is that as long as investors come in for the right reasons with the right amounts, it's a very, very good thing.
Okay, fair enough. Well, let's then broaden it out. Sitashwa, you tell us, what has the experience been? Because you have a tie-up with several brokers. Is this a pandemic phenomena? Because more time at home, more work from home. So, okay, let's do everything exotic, including bitcoins, US equities, and so much more.
No, I think it's more secular than that. Of course, with the pandemic and people sitting at home, people having extra time to invest, they generally came to the market anyway. But I think it's not just about the pandemic or just about a short-term trend. What we have seen is, and since we've seen this across brokers in India, we've seen a much more secular trend. I think we've seen this as a beginning of a long-term trend, is what I see. For example, on Stockle, we've, in the last about 16, 17 months, we've done over $500 million worth of transactions from Indian investors. And investors are not just investing in FANG stocks, and Radhika makes a great point. People are actually exploring, where all they can invest. People are already knowledgeable as well of the global market. So it's not just, 15, 20 stocks that people are interested in, that we commonly hear about. People are, in fact, on Stockle at least, we've seen people invest in over 3,500 securities. So that sort of tells us something about the market, from that perspective.
Okay. Gaurav, good to have you on the show as well. Is that the experience that you have also had with users on your platform? First thoughts?
So we are tied up with Western, as you mentioned, right? And some of what Sitashwa says is true. I think it is a structural trend. People are realizing and accepting the fact that investing abroad is an option they have outside of mutual funds. We do see a lot of trading in some of the more popular names. That's also true. Meme stocks in particular, GameStop was one of the highest traded stocks in January, even on our platform through Vested. So not all of it, I would say, is structural. Not all of it is long-term. Some of it is definitely driven by pandemic. What we are seeing is that the investor is becoming more aware that there are these choices that they can use. So I hope it becomes more investment-led rather than focusing on technology and meme names. So only time will tell about that.
Okay, fair enough. Now, the next couple of minutes to help people understand how these direct platforms work, in case you're not already on this. So, Sitashwa, I'll take it back to you. My understanding is that, Stockle Invested, your platforms, you offer direct access to the real shares, not to depository receipts, which involves me converting my Indian rupees in US dollars and routing that money to the US market. So, what are the mechanics? And is it a little complicated?
No, it's very simple actually, and I mean it was complicated maybe a couple of years ago, but we've made our best efforts to simplify it, and we continue to do more of that. Every day. The idea is to make it as simple as investing locally. To be honest, maybe even simpler as possible. So the mechanics really is this: you come to Stockle, you open a Stockle account. When you open a Stockle account, in the backend you get a US brokerage account, which is similar to any other US brokerage account, with a Schwab or a Fidelity or any large US broker. It's the same kind of account on Stockle that you get. Once you have a Stockle account, then like you said, you have to send money into that account to fund it now. That's where the Indian banking system comes in. So many banks have now gone online with overseas remittances for investing, which was again not the case even 6 months ago. So the good thing is that you can just basically send money via net banking into your Stockle account that you just opened. Forex element obviously comes in when this happens. Once your money hits the Stockle account, your Stockle account, basically you have cash to invest. Right? So if you are preparing yourself to invest in stocks or ETFs or buying portfolios on Stockle or whatever, the idea should be to just open the account. It takes hardly 1 day to get it all done. 5 minutes of effort online. In fact, later this month, this will become a 5-minute process from a KYC approval perspective as well. So it won't really take any amount of time, to open a global investing account essentially. And then once your money is in the US account that you just opened, which again takes the lowest that we have seen is about if you do it at in the morning your time in India, by the night in the US, so when the US markets are open, your money is already there. But on an average, it takes 2 to 3 days for your money to hit your brokerage account. So overall, a little bit of time to open the account, 2 to 3 days to get the money in your account, and you're up for trading. It's very straightforward.
Okay, so you're saying it's straightforward, but yeah, I guess this wait is something one has to bear in mind, that it will take maybe 2 to 3 days to actually get your Indian rupees converted to USD, and then you can start trading. So just further questions on this, Gaurav, to you. Again, on the mechanics, and the cost is very important, right? This is money, money, money. So now there is the global pipe. It could be vested in your case. There is the Indian broker at this end. There is a US broker involved. So many layers. So at the end of the day, for every dollar that I'm ultimately putting in, what's my cost?
Actually, cost-wise, it's not. So it depends on what cost you're looking at, right? If you look at brokerage cost, right? So, and I'm pretty sure Stockton will say the same thing. The brokerage on the US side is a zero-cost brokerage, right? So that's, you're not paying for the actual brokerage. The cost and the friction is mostly in sending the money abroad. And as things stand right now, as was said earlier as well, it takes it's a T+1 or a T+2 process. T+0 would actually be fantastic, and I know that both the companies are probably working on that flow, and we expect something to come out by next quarter or definitely by the end of this year. The other cost is LRS has to happen through a scheduled bank, and those bank fees right now are a little high. So the two problems that I think in direct investing that need to be solved are not on the brokerages funds, right? I mean, the brokerages that they're tying up in the US are really good brokerages, very good companies, and the brokerage costs are really low. I mean, it's zero brokerage, so that's as good as it can get. It's mostly around the LRS rules and transferring the money abroad. Right now, it can take anywhere from, I think, 500 to 1500 rupees. So if you're not transferring a large amount of money to the US, what happens is this cost can be prohibitive.
Okay.
And these costs are to a large extent fixed costs.
Okay, so the smaller the sum of money, which is something maybe retail investors would want to do, the higher the cost. That's what we've understood so far. We'll take a break and come back and also map this on the other very big important element, which is taxation. And then the contrast, mutual funds, direct stocks, how do you do the right mix between the two? We continue the conversation after the break. Welcome back. You're with us on Money, Money, Money. And this week we are discussing a pretty interesting and popular subject, how to start trading directly in US or for that matter, global stocks, and how to do the right mix between your mutual funds, which give you that option as well. Gaurav and Sitashwa, we've understood the mechanics now and broadly the costs. The next thing is tax. Now, my understanding is that capital gains, the regime in India applies. Is that right? And then what would be the level of taxation here, Sitashwa?
Right. So, this is from a tax perspective. Our understanding is that this is treated as an unlisted security. Basically, anything that's listed on any exchange that is not governed by SEBI is considered unlisted in this sense. So, any US stock or any international security is treated as an unlisted security in this case. Short-term capital gains and long-term capital gains apply just the way they would apply for unlisted securities. Dividend is taxed in the US, like you said at the beginning of the program. Any dividends are tax withheld. 25% withholding applies to Indian investors, but there is a double taxation avoidance between India and the US. So because of the DTA, you don't have to pay tax on it 2 times.
Okay, so dividends, 25% US tax, capital gains, Indian taxation, but the same kind of taxation that is applicable to unlisted securities or even debt for that matter, not the Indian equity taxation. That's what we need to remember. Now, Radhika, having understood all this, I bring it back to you. So the whole LRS conversion, the bank charges, the taxation, how are you handling this? How are mutual funds handling this? Because for us, it's very simple. We invest in rupees, we get our rupees back, and the cost is between 1 to 1.5%, I guess. Correct me if I'm wrong on most of these global funds.
So yes, I think, in the mutual fund context, actually, it's now as simple as buying a local equity fund. I think the taxation is very clear. For instance, the taxation is debt taxation, which means you get indexation after 3 years. Effectively, Subhi, that works out to about a 15% rate of taxation. Domestic equities is 10% locked down. This is 15%. There's no ambiguity or, confusion on dividends, and you don't have to do any tax filings in any other country outside of India. It's as good as investing in a debt or gold fund in India. You're right about the costs. I think in the direct plans, costs are between 1 to 1.5%. The total cost in regular plans for international equity mutual funds is capped at 2.25%. And there's a lot of chaos about this. People don't realize that 2.25% actually includes the cost the Indian AMC charges and any cost the global AMC, like in our case, JP Morgan charges. So your total cost of ownership of a local equity fund and international equity fund is not different at all. I think net of currency conversion charges, etc., that you do while directly investing, this actually works out to be quite cost efficient. So that's the second thing. And then the minimums here are very similar to the minimums in a local equity fund. So I think the experience while investing in India is just the same as investing in domestic mutual funds. And of course, all the goodness of domestic mutual fund features like SIPs, STPs, etc., also are available. I would say, sort of hearing the discussion, I think they are both very different routes. One targets your rupee money, one targets your LRS money.
Okay, fair enough. So, another question, and Radhika, I'll start with you on this. And here's where we talk about active versus passive, generating alpha and all of those things, right? In direct equity investing, someone who's very well versed with the US market can go and, target exactly the stock they want to get. Now, in mutual funds, it's a mix of both. There are funds tracking indices like, the NASDAQ 100, some active funds as well. So what should we expect from the mutual fund fraternity when it comes to really creating, alpha generating products for investors?
So I actually think the fund of funds route has done a very good job creating alpha generating products, not just on the US side, but even on the international market side. And I also think the variety available is very, very vast. Today, you get every single region. I mean, we are probably 90% of the market in terms of regional coverage. So you'll get a Europe product, you'll get a China product, you will get US products, you'll get US value products, you'll get growth products, you'll get technology products. So it's not like your options as to what there is in India are limited. Even within tech, you'll get pure tech, you'll get concentrated tech, you'll get disruption. So I think the themes that the mutual fund industry is offering are actually very, very vast. If you look at some of these funds, and I can speak to some of our own also here, and their performance relative to the fund, things that they're benchmarked to. So whether it's Russell 1000, which is a technology index, or in the case of China, one of the Golden Dragon indices, most of these are large global feeder funds that have managed to generate alpha. And the mutual fund industry, as you correctly said, has passive options. Now, the investor, whether he is investing locally or abroad, always has the debate of direct equity or managed funds. Perhaps there are cases where people may want to do direct equity in names they understand, but you also have to ask yourself, there are probably spaces where you want the capability of not an Indian, but a global fund manager who knows how to pick disruptive tech stocks or China stocks, which is a very, very specialized domain.
Yeah, if only it was as easy as looking at past returns and predicting the future. We all know it's not, right? Gaurav, the other interesting piece, now local stock exchanges, the big boys themselves are getting into the game. NSE and BSE are of course going to do this through the International Finance Center at Gift City. So then what does it mean for existing platforms, and how could the landscape change over the next couple of months?
See, I'll also add to what Radhika was saying. a lot of these investment avenues actually coexist. Just to give you a simple example, right? Mutual funds, AMCs in India have a very good selection of India mutual funds available. But still last year we saw that there was this huge growth in broking where investors thought, hey, you know what? And this is all India, right? We're not talking US, we're not talking whether you understand the market or not. But still investors felt that there is a need, that they think that, they can kind of control some of their financial destiny better, or they want to try out trading. Different reasons, but we saw this growth. So when we think about direct US investing and we think about mutual funds, I never think of it as an either or scenario, right? I think of it as both will coexist. Some investors will choose the mutual fund route, some investors will choose the direct investing route. Now, what the exchanges are doing is extremely interesting, because what they are saying is let's bring best of both the worlds together. Single name trading, but as Indian domicile stock receipts, right? So, like Indian stocks trade in America and they're called ADRs, for example, as an ADR in the US. Similarly, they're starting with 50 stocks which will have a depository receipt in India and they will be traded just like Indian stocks. So, again, another avenue for investors to kind of pursue expanding into global equities. But again, I would not think of it as an either or. None of the solutions they all have their own strengths and they all have their own weaknesses. Depository receipts will be a very new concept in India, so it remains to be seen how deep that market will be, how many stocks will be offered. You're starting with 50, but then how is that universe going to expand? There is something called a depository receipt fees. So whichever is the bank that is a custodian bank will usually charge a DR fees. And we still don't have any idea on what that DR fees is. And finally, depository receipts may or may not track the underlying stock. Unless there is arbitrage, which allows them to track underlying stocks, there can be a significant difference in how they trade. So, while we think it's a great development, and I think BSE will probably come in and kind of stretch the limit even more. I mean, my view is that all three will coexist pretty happily, and they'll all see a lot of growth.
Yeah, my understanding is BSE is looking at, tying up with over 100 global exchanges, not just US exchanges and US stocks. So, Sitashwa, we're down to the final minute on the show. So, last words, some advice for our viewers, because there are so many options. It's very easy to get carried away. So, what are the most important things one should watch out for? How to keep your eye on the ball?
Yeah, so I think, cost was one of the things that came up. And in that perspective, cost is lower if your amounts are slightly higher, right? So we have seen, for example, on the Stockle platform, people who try to invest, say, 15, 20,000 rupees, 10,000 rupees, have only done that as an experiment to see how it works. The cost comes down the moment you start aggregating about 1 lakh rupees and then invest. So on the Stockle platform, again, for instance, the average remittance size is about $3,000. So a little over 2 lakh rupees is the average. The average trade, though, is about less than $1,000. So people, while sending money is where the most costs are incurred, my recommendation would be that you aggregate about a couple of $1,000s worth of rupees, so lakh and a half, and then send, so that your forex outflow is lower in that sense.
And if you're not very confident,
and of course, education about the market is critical.
Which is what I was just saying. And if you're not very confident, then keep it simple. Follow the mutual fund route. Let experts do it for you. But it's been a very, very interesting conversation. Thank you very much, Radhika, Sitashwa and Gaurav, for joining in and enlightening us about a very, very dramatically changing landscape when it comes to global equity investing. That's a wrap on this week's edition of Money, Money, Money. Thank you for watching.